we can provide a value to the agents just to be in the forefront of what we're seeing right now. So Fernando, if you want to introduce Jay real quick.
Well, Jay is one of my loan officer guys. He just wanted to come in and see the show. We'll call it that. Because I'm going to help. We have another office, C21, that I'm going to help him do the same thing at. So he just kind of wanted to do the sneak preview and see how we operate. So, all right, this is Jay. And then you want me to introduce?
Yeah.
Luis. So Luis and I go back, I don't know, 10, 12 years, something like that. And I've gotten to know him, tremendous respect for him. This man's been in business for 30 years plus. I mean,
Only 30 years?
Only 30 years plus. He has obviously is a top producer in his office out of the Keller Williams Huntington Beach. He used to be with Cerritos before that, still with the Keller Williams family. And then I had various other offices. I met him back in the Keller Williams days back then in Downey there too for a bit. But this guy here has served as president of NAREP in the past, president of the Real Estate Association, where he's under registered, director at CAR. He's in the know. He's been very involved. Owned property management companies, all kinds of different things along the way. Which some of it he's gotten rid of just to free up his life. Because obviously he's got some young kids and beautiful wife. And we've become great friends. He can tell you some great drinking stories that we shared. None of them end well for him, by the way.
That's what I'm here for today.
Yeah, he's here to warn you. Do not go drinking with him. But yeah, I'm going to bring him up. He's going to give you a little perspective on what he's doing with his team and what he's hearing down there in the Orange County office, which a lot of it in terms of the market applies to us here in the South Bay and that area is fairly similar to for the most part. So I'm going to go first, and then I'm going to bring him up, and then we're going to try to get you guys out of here right on time. So we're going to knock it out in 50 minutes. And please, I want this to be interactive, guys. There is no dumb question, only a dumb answer. That comes from me. So that's it. Okay, so don't think that if you're lost on something, something's fuzzy, slow it down. Because what we're trying to do, guys, is give you every single option that you possibly could think of when you come up with objections, when you're talking to people that are nervous because obviously the market is changing, rates have moved up, et cetera, et cetera. So before I get started, here is what you guys and or your buyers and your sellers are looking at every single day. So this is from CNBC under the real estate section. This is what this is as of today and yesterday. Okay, housing market continues to cool down as new home construction drops. It's going to be a bumpy landing for the housing market. It's another one. June housing report data weaker than expected. Forget that. What is that? Hold off. Oh, hold off on buying. Great. Price cuts in housing are inevitable. College student stuff. Home builder sentiment drops 12 points. Home builder sentiment plunges in July as buyers pull back. And as a matter of fact, I was watching the Redfin CEO this morning. He said 15 to 20% nationally of all offers that were in contract have canceled. Okay, and actually one of the things that I'm going to start off here in a second with as a potential answer for you on that, and I'll give you a couple of examples that have happened in the last week. So anyways, most of you guys know I'm Fernando Diaz with Homebridge. Just want to let you know that. Very simple. Just pass my card around. Some of you guys don't have it. Some of you have asked me for my information, so you guys can take it from there. A quick bit about myself. I'm going to keep it brief. I've been in the business about 27 years. I've been honored to have 2 full-time assistants that have been with me. You guys have never met them, but they're behind the scenes. They're fully licensed. One of them is fluent in Spanish, better than I am even. And they've been with me both for over 20 years. So I think that says a lot about the team we have and the quality of the personnel that work with me. Okay, so I will leave that at that. If you have questions on how to reach them or anything else, in case I'm not available, put my business card over. Their emails and direct lines are there too. Okay. One of the big things, guys, in terms of how to focus yourself and provide solutions, there's no particular order here necessarily, but I'm just going to go right through them. In the past, guys, remember, I don't know if you guys know, some of you that are new probably don't remember that sellers used to do what were called seller carrybacks. Okay. So in the older days, okay, we would have a situation where your borrower had 5 or 10%, and to avoid mortgage insurance and to also avoid some tax liability on the seller side, sort of make it a win-win, the seller may provide 5, 10, 15, 20, 25% of their money or their proceeds towards the buyer's purchase and help them out with either a lower payment overall and also no mortgage insurance. Okay, now what I'm going to show you is I did a couple of scenarios here so you guys can see what's going on. First of all, I pulled, as of this weekend, the top CD rates in America. Okay, And obviously, these are anywhere between a 1.5 to 2 year old for a bank. And they range between 2 and 2.65%. So if you have a buyer, or excuse me, a seller that has $1 million in cash out of the sale of their house, and they want to put it in CD, 2.65 is the best I saw. Okay, now, here's an idea to compare it. Let's say you guys have a buyer with 10% down, which requires mortgage insurance in a lot of cases, so fashion or the other. And here's an example that I'll give you. They buy a house for 800,000, 10% down, 80,000. Okay, the total payment with taxes, insurance, mortgage insurance, everything is 5,029. Okay, that is as of this weekend in terms of the right rates and everything else. Now, if you take that same example, okay, and have a seller that is willing to give, let's say, a 20% carryback, okay, so 160,000 of their money towards helping this gentleman or family buy a home. Okay, here's the new payment. You ready for this? 4,681. Big difference. See that? Same amount from your buyer, but now this guy or family is contributing to help them out. Now, 2%, I didn't do the calculation of that, is not a lot. But if they can get 5% interest only for 5 years, that's $7,992 a year that they will make on the buyer's money, that they lend on. Okay, so it's a win-win situation, guys. Your buyer gets a lower payment. There's no mortgage insurance, which for most people is not a tax write-off unless you make, under, I think it's 109,000 per family or something like that. I don't know tax rules, but I do know that. So it's a great way to go. Once again, thinking outside the box, because this is what we're trying to give you guys, is ideas to think outside the box.
How much of the carryback is that? What is the percentage?
This one was 20, so it's 10% at 20, and it gives you that payment. So it's about a $370, $80 difference in payment from just doing it one loan, 10% down flat.
And then the buyer doesn't get the PMI, right?
Yeah, no PMI. No. Yeah, and usually, guys, it has to be a minimum of 5 years for most investors. The money has to be there. Obviously, they can pay it off anytime or refinance it. There is no penalties, guys, for this. And then a lot of times, a seller may re-up it and say, hey, this is great. Get my 8,000 a year. Let's keep going. Right? That's the one I want. I only made about 25, 30, I think, so I didn't know how many they had. So if you didn't get a flyer, guys, I can email Simon or Holland all of them.
Why can't we make copies right now?
Well, I want you in here listening. Then we'll copy. So this has come up big in the last 2 weeks, guys. And this came from, as a matter of fact, when I talked to you about 15 to 20% of most of the in escrow transactions canceling, I guarantee you that the majority of those are builders. Okay, because builders, when you buy a house, you're looking at a model, and then you get in line and say, okay, let's buy this thing for 650,000, whatever. And then they're like, okay, great, this will be done in about a year. Okay, well, if you back up 12 months, where were rates? And where are they now? Okay, you see the big difference? That's why people are canceling or dropping out of it, right, for many reasons. Now, our builder department years ago built in what's called lock and shop. Okay, so if they were doing this, or these mortgage companies had that ability to do this, which by the way would be paid by the builder, we would allow them to lock up to 1 year. Okay, but the builder's paying the cost, but now the buyer's protected. And do you see how now maybe you wouldn't have as many cancellations because they may still be at 275, 28. Even though the market's at 5, 5.5, or whatever, right? Depending on the situation. Okay, so what we've done is we brought this over to our retail department. Okay, so now we're doing it for your customers. So I'll give you a perfect example of one that just happened last week. Another agent from another office here has a listing here in Torrance. They're going to sell their house. I think it went live today or tomorrow. But the guy is extremely nervous about how long is it going to take for me to sell my house in this market, right? Because it's changing, where, and what am I going to really get? Am I going to get my 745, 50 for the condo or not? And also, by the time it sells and closes, and then I got to find a house, what are rates looking like in 3 to 4 months, 3 to 5 months? That's a big issue for him mentally. And also, think about it. Once he sells it, he's pretty much all in, right? What if rates jump to 6, 6.5%? Now he has to live with that, right? Well, we locked him in at 5.3. He's paying a point for this particular product that he wants, the range he's in. And so basically, for the next 120 days, that is the worst he can possibly do. So it gives him now he can breathe. He's a very happy guy, right? And I even said, hey, if rates improve for any reason, we can always slow you down when you go into escrow. Or if we jump out of this program, which is a Fannie Mae type program, and go into a jumbo hybrid program, and the rates are better there, great, cancel this one and we'll go there. So, but the worst you're gonna do is this. You see what I'm saying? So it gives him a sense of security, guys. And really that's, I don't know if you guys have a question on that or how that operates or works.
So you lock it without having your property?
TBD, to be determined. That's it. Yeah. So not only for buyers, also for sellers moving up to buy, but a lot of your buyers, guys that are right now tinkering or, about fear and what's going on, because I just read you all the real estate section, negative, 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 negative. So it's your job to spin it positive, 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 okay? So there's good, bad, and everything, right? We all know. So how do we make this advantageous to you guys when you're speaking to the public out there? Okay, that's what it's about.
Is there a cost for that?
What's that?
Is there a cost? for
He's
that?
paying 1 point for that particular lot once he finds a property. Okay, so he's aware of it, But 1 point for the security that he doesn't care. He's
Oh,
happy.
absolutely.
And not to
They
mention,
have
over
a
here,
lot
he's
of
gonna have
buyers.
a high down
Also,
payment.
motivate
Yeah.
the buyers to start looking because
Well,
they
it's,
have 3 months of, finding something that they like. It's really good.
all right, the next one we're gonna talk about, which has come up a few times now, here you go. That's great, thank you. Is the buy downs, guys. Now, quickly, let me give you an example of something, because somebody brought this up, and here's the situation. When I'm talking about buy downs, guys, I'm not talking about what a lot of you think. Hey, let's buy an extra point and buy down the rate. Okay, don't get me wrong, that's nothing wrong with that, that's good. But here's an example of the difference of the buy down I'm talking about, to the buy down that you probably are thinking about, okay? I took I think it was a $600,000 loan at 5.5% at 0 points, hypothetically. And I said, okay, let's get the seller to credit him $6 grand and buy it down a quarter, which is typically the spread, depends on the day. That gives the buyer a $94 improvement in the payment. Okay, over 10 years, 120 months, right, 120 payments, he saves $11,280 in 10 years. You guys get that? Now, if you do a 2-1 buy down, which means in this particular case, the first year he'd be at 3 1/4, the second year he'd be at 4 1/4, and then for the remainder of the loan he would be at 5 1/4. Let's say, and it doesn't matter, you can even move it back to 5.5, do the same thing. In 2 years, your buyer saves $12,564. So in 2 years, 12, or in 10 years, 11, which better? See the difference? Okay, now this is seller paid. So obviously you need a seller that is in a position to pay that, which a lot of them right now are. I've got realtors calling me on stale listings that are not moving. They're putting this on the MLS right now as we speak, and also did a price reduction to entice the public and the buyers to come at them with something like this. Okay, I also had 2 weeks ago, a situation where an agent called on, once again, somebody wanted to cancel and said, what could we do? The concern of this gentleman, who's an engineer here at Raytheon in Norfolk Southern, is he's a single income household with 2 kids. That's why the wife has not worked in the last few years. She was working before. She plans on going back to work. And I told him, why don't you do this? Go back to the seller and ask. He didn't even know this existed. This gives him all the peace of mind he needs, because he knows in the next 12 months, it's going to be a dual income household, right? So if he goes back to 5.5% or whatever, I can handle that as long as my wife is working, not an issue. So you see how that can save the day, all of a sudden, once again, thinking outside the box. Any questions on that? Nope. Following along, which is great. This one here, yes.
This seller pays temporary interest buy down. This seller is gonna pay that. Unless it's.
Well, I've got 2 right now that are looking at it because their houses are moving.
Exactly.
So if you have a stale listing or a situation where, like I had right here, where they were gonna cancel on you, how are we gonna keep this thing in? I just gave you a perfect example how you keep it in. Because you may pay $12,000, maybe there was no seller credit, now they're gonna pay $12,500. But what is the other alternative? Let's put it back on the market and see what we get. You may come out worse,
Right.
right? If it goes back into escrow.
Well, they're probably getting ready to do a price reduction.
And that's it, right? So what, you're gonna knock it down 25 grand? Well, here's 12 grand. So you'd rather knock it down 25 to 12, but call it a day, right? I say, trust me, it's once again, it's happening, guys. I see it. I'm having conversations all the time with people from all of the LA County about these strategies. Because if things aren't moving, or if my buyer is uncomfortable, maybe I can talk to somebody that had a cancellation on a listing and now it's sitting there and say, hey, are you willing to entertain a 2-1 buy down for my client? And by the way, you can also do a 1-1 buy down. Okay, that means that instead of 5 1/4, 4 1/4, 3 1/4, it's 4 1/4, 4 1/4 back. That's a lot cheaper. That's about $8,500. So instead of $12,500, it's $8,500. Now he keeps that rate for 2 years, saves him thousands of dollars, the buyer, and then he goes back to the regular rate for the remainder of the time. Now, keep in mind, if rates were to tumble, which they may or may not have been, at any time, there's no penalties on these loans. Your buyer didn't pay, but the seller did. So if there's an opportunity to refinance to 4, 4.5, whatever, do it. Right? You can do it. You don't have anything to lose. Go ahead.
So the only thing I'm worried about is, I feel like this rate high is induced by growth taxes.
Yeah.
So slow down the economy, right?
Well, they're trying to slow down inflation, that's why.
So I feel like whatever it is, in 2 years' time, when Biden is about to run for re-election, or they wanna get back, they're gonna bring this thing back down.
Well, potentially, but keep in mind that a party change in the office isn't gonna change the dynamics of inflation and all this, and supply line issues overnight. It's a process, okay, so, I mean, I don't disagree with some of your statements, and I'm not saying that, but there's just a lot of unknown. I think the reality is, you're just asking me my personal opinion, a lot of it is just energy, guys, and this administration is obviously, you know, poo-pooing the oil industry. And think about it, what product thing, anything doesn't involve energy to get it to a store, get it anywhere, or produce it? You name it, anything, right? I mean, cars have to come off boats or planes or wherever, get on trains, get on trucks, get it to where they're at, all that requires fuel, right? Energy, you know, natural gas, another whole thing. So that's a whole thing, it's a whole nother area or direction to go in, but that obviously is affecting our markets, and we are where we are for whatever reason it may be. That's just what it is. Now,
So just quick, sorry, so the 2-1 buy down is 12,000, is there?
well, it depends on the size of the loan, keep that in mind.
800,000.
Yeah, it depends on the size of the loan. So this example was around 650, as I recall, that I did loan amount, not sales price, loan amount.
Right, so
Yeah, so that's where it's, that's fine too. This one, a little bit outside the box thinking, but that's what we're here to do. This is renovation loans, guys. Okay, now you might think, well, he's doing that now, whatever. Well, I will tell you, I've had a few people that are looking at some fixer-upper properties, and they're competing a little bit with not a lot of investors, but a little bit of investors. What we know is this: if you have a buyer that is going to be owner-user, which means that, hey, I want this house in Gardena in whatever neighborhood, and I really want to live there, you can offer a higher price than any investor can, right? Because an investor has to get it at whatever price point he thinks, plus fix it, which they know what they're gonna put into it, and then have some margin to be able to make some money after sales costs and everything else, right? And especially in this market, that could get a little bit nervous, right? Because you don't know where the market's gonna be in 9 months, 6 months when you're done with the house. So what I'm saying is, don't discount these loans necessarily, because you could also potentially go get a 2-1, make it a 3-2 with this product, and you might actually have more equity for your client than you did if you bought a fully fixed up 3-2. Okay, so you guys have to look at your markets and say, hey, you know, Mr. Buyer, there are some possibilities here on fixer-upper properties that may, you know, get you to what you want. Okay, and the other thing I always tell people is this: most people, investors, do things for the most part on the cheap. Okay, right? And you may not necessarily like the colors they pick, or the cabinets they use, or the appliances they use, or whatever they use. This loan allows you to do it the way you want it. So whatever it is that you like, you do it that way. Okay, question? Go ahead.
Talk about a 203K loan.
Yeah, and also home stuff. Fannie Mae does it too, so you can go both ways. So I'm not discounting that. And the last thing, which we were doing up until the rates moved up, was a lot of clients were also using this loan to not only fix the property, wherever it may be, but convert the garages to ADUs, which now creates more income. So yeah, you may be taking on more loan, but you're fixing the house or expanding the house the way you want it. But now you converted the garage to an ADU, and now you have to factor in that income. All of a sudden, the situation looks a lot better when you're getting $1,500, $2,000 a month for that garage. Okay, I don't want to get complicated. This is not the day. There are some perks to ADUs with renovation loans. We can talk about that another time, but
So
we have to do.
is there a particular amount for the renovation? Is it $35,000?
No, you cannot exceed the county limit, but there is no particular. It could be $30,000 or $300,000, as long as we don't go over 970 in most cases. And also the value of the property has to be there, right? So if you borrow $800,000 and the property fixed up is only worth $6, that's going to be an issue, right? But if the future value of the property, because that's how these things are dictated, is at least equal to the amount you're putting in, you should be okay in most cases, not all. But once again, outside the box thinking, right? This one, this is more for knowledge.
Don't go too far, bro.
Gary, you and I can have a conversation after, right? Sorry, no, I'm kidding.
This renovation loan,
Yes.
It's still gonna close within the limit, like if we put an offer for a buyout, and we know we need to do renovation law.
Okay.
We can close escrow in 30, 45 days.
30 to 45 days is customary. Here's your biggest snack real quick. Get a contractor quickly. A lot of these, your customers may have a friend or relative that's a general contractor. We just need his bid. That's basically it. As long as we have his bid and then I have a consultant that can work with him. I know Tommy Andrews is a big consultant here in Los Angeles County. He's known me for years. He can help your contractor just set up the bid because FHA or even Fannie Mae has a requirement for it. They really want it broken down between materials and labor. That's all. And there's a spreadsheet they have. They'll send it to us, fill it out.
And the rates for it still stay with whatever rates we.
I would say a quarter to three is higher than a standard FHA or Fannie Mae for the most part. It's typically what they are.
3/4.
No, quarter to three, it's 0.2 to 0.3 higher, typically. But trust me, if your client's gonna get the house the way they want it, you think they're gonna care about 0.2, 0.3? Odds are probably not, as long as it's within their budget. Once again, everything's about affordability. That's a whole nother conversation we'll have at the end, but that's what it comes down to. It's not rates, it's not prices, it's what's my payment. That's what's important. All right, so speaking of which, payments, I just handed this one out, the Freddie Mac one. Freddie Mac just opened, literally, weeks ago, days ago, the ability to use ADU income to help clients qualify for properties. FHA doesn't do it, VA doesn't do it, Fannie Mae doesn't do it, nobody did it prior. It had to be a legal second unit, third unit, fourth unit. Now an ADU only by Freddie Mac standards or using Freddie Mac is allowed, okay? Quickly though, the only caveat, which is not the end of the world, is you either have to have property management experience, so maybe you own some investment properties, or you have to take their class online. So that, I'm sure you can come over that. Also, this can also be used in terms of investment. So let's say your client is buying a duplex and they don't qualify, but there's an ADU there. You can use that income now too. So maybe that'll get you over that hump. So this is more just general information.
So the income you get from that ADU is the whole thing, or you think?
75, just like any other, 75%. Here, I'm gonna go quick. These are coming back, I'm getting a lot of people asking. It's the same topic. I'm not gonna spend a lot of time on it today. I think that's another seminar for another day. But first time buyer programs, guys, my team sends a slew to our database. My database is thousands of closed loans and pre-approvals. And I've gotten a ton of interest, people getting pre-approved or pre-approved, or sending it to their coworkers or clients. So, these loans, when the market was hot, was almost, every time you sent in an offer, a listing agent had 30 and it would go right into the fighting bowl, right into that one. But things are starting to open up. And what I will tell you is, as of this weekend, FHA's rates, if you do the FHA model, which I recommend, the conventional model does not price out very well, was 5.25 on a 30-year fix, and you get the down payment. You do not get closing costs. Now, is there a way to get some closing costs? The answer is yes, but I highly advise you against it. Because when you go over to the additional subsidies, or they call them zip loans, the interest rates start going through the roof. Now you're at 6.25 for 2%, 7.25 for 3%, something like that. It gets nuts. So I would stick to the standard one and ask for as much concession from the seller as you can to pay for the closing costs. And then they can either use their money, hopefully they have some, right? I always think people should have a little bit of money to buy a house, or maybe they can get a gift for the remainder. Okay, I can spend a lot of time on that. These programs, though, guys, are starting to come back once again for the entry level buyer. Okay,
Say it again, I'm sorry, could you repeat this program,
which part of it?
the whole thing?
The whole thing? Oh my God, Tara. The whole thing. It's a down payment assistance program. Stick to the down payment only. Don't stick to the other ones. It starts cranking the rate. You and I can discuss it on the side here. But that's basically what I'm telling you here on this. There's, like I said, there's the good and the bad with everything. So the good is that you start getting greedy and asking for more, and a bite. The other thing too, wait a minute, I'll give you 2 tidbits of information here that are important. They raised the Los Angeles County limit for any family, as long as you don't exceed $180,000 of income, you're in. So that's a pretty big window. And that gets you some pretty good private sales pricing, okay? The other thing they did, which they weren't doing before, is if the FICO score of both borrowers, so remember it's the lowest of the two, is over 700, now they go to 50% back in the ratio, okay, which was not the case before. They would push you down, okay? If you're under that, it goes to 45, so you're kind of back to where you were, but there is now a perk. That extra 5% may be the difference, guys. So, like I said, it's not the end all with all, but it's definitely something to entice people as you're talking to them to say, hey, why not look at this and let's see how far you get there. And let's compare it to maybe a regular FHA or something else, just to see what the differences are. That's all. One more. Here we go.
Fernando.
Yes.
Can you repeat that criteria again? You said the FICO score above.
Over 700,
Okay.
they go to 50% FICO ratio now. Under 700, it's 45. And keep in mind, I think the minimum, they raised it to 660, but I think I saw they pulled it back to 640. So you have that, there's minimum standards too. Okay. ARM loans. Okay, once again, initially when Simon and I talked about this, we looked at this, and take this information this way. There are 3 categories of buyers, even here in the South Bay. Okay, there's entry level, okay, and then you have to take this information and say, okay, the entry level first time buyer, what here is good or applies to them. Okay, then you have your mid-tier buyer, which sometimes is probably your move-up buyer. I think that one. That person is probably going to sell a house like a condo or townhouse and moving to something a little bigger. Maybe now they have kids, et cetera, et cetera. Or, they're in the 750, 800 to $1.2 million range, hypothetically. Okay. And so on and so forth. And then you have your high-end, high net worth individual. Okay. And you guys have to also size up that audience. So for example, a high net worth individual is probably having a great day today because the market's up like 600-700 points. Okay. Because they typically have money in the markets. So they've been watching that. Okay. But a lot of them have also, since the beginning of the year, really taken a big dive with their portfolios. Okay. So for example, I was with a friend this weekend at this event at TV Country Club in the morning, and he's down almost $500,000 in his portfolio. So he's not very happy, obviously, right? So that guy, if he was looking to buy and use some of that money, he would be poo-pooing everything right now. Okay, you see that because he took a big hit. So you have to realize who your audience is, what's important to them. Whereas an entry-level buyer, maybe they have a 401k, whatever, not a lot in the market, probably doesn't affect it too much. Okay, so that's something that, once again, know your audience, right? So here are ARMs. ARMs in today's market, guys, are really not pricing out that great because I don't want to get complicated again. We have the inverted yield curve, which means short-term rates are now higher than longer-term rates for the most part, which are signs of a recession, by the way. And unfortunately, when I looked at the models this weekend, to give you an idea, there's 5-year fixes, 7-year fixes, 10-year fixes, and even 15-year fixes that then after that term convert to adjustable rate mortgages. Okay. Now, here's 2 examples that I'll give you. The best execution I saw on a 7-year ARM, there was 2, was 4.6 and 4.7. Okay, and on a 10-year was right around 5%. I looked at a 30-year jumbo; it was between 5 and 5.1. Why would you risk it and not just take that? I mean, you're talking nickels and dimes when you look at the difference in payment. Now, the only way that maybe it's advantageous to you, once again, you're a high net worth buyer, typically self-employed, et cetera, is interest only. Okay, because if they're willing to, maybe they want the interest only loan because they're building a business or expanding their business and they don't want to use, have as high a payment, shall we say, so that they can concentrate on that. But once again, you're talking about people that typically have a lot of means, a lot of income, a lot of down payment, and et cetera, for these loans. Okay, these loans really do not exist under 20% down. Okay, or more. And by the way, speaking of bad news, this is the biggest player in LA County. Mostly, it's no secret, is Union Bank Wholesale. Union Bank, right now, this came Friday, they pulled back on loan to values, credit score requirements, et cetera, because they're seeing a change in the market. They're being cautious. By the way, that's another thing I'll tell you. A lot of banks, a lot of investors right now are rethinking their guidelines and probably thinking, hey, we need to pull back a little bit, not be as aggressive because things are changing, right? So they just announced right here a bunch of changes, which means it's going to get slightly harder to qualify for these ARM loans for these wealthy individuals. Okay. Last one. This one's kind of a fun one. Brian, what year report? 82. 82. All right. In 1982, if I could read this, the average 30-year fixed rate, where's 1982, was 16.04%.
Oh, yeah.
So we're talking about mid-5s or 5. It's like it's gravy, right?
Economics.
So you guys can pass this around. That shows you the average 30-year fix since 1974. I'm 1972. I didn't make the cut. So now. So I think that when you have buyers complaining a little bit about rates, you may want to ask them what, how old their parents are when they bought their house, and point to that. And say, okay, you think 5% or the 5 is high? Well, look at this. What else? The last thing I'm gonna leave you with, guys, before I bring Luis up here, is it's really affordability, guys. That's it. When you're talking to people, it's not about, everybody knows rates are, the cat's out of the bag, right? It's no secret that rates move from the historic lows. That's the other thing too about people's psyches, guys. You guys, obviously, if you've been in the game long enough, you know where the rates were with some of the years that I gave you. But what you have to really remember, guys, is we are fighting the historic all-time lows in the history of the housing market. So you have that psyche and that situation that we had for years going into the current market now. And people are spoiled, right? Everybody wants, they want it, right? If they could have had it, oh, I wish I would have bought, blah, blah, blah. I'm sure you've heard all the stories. But that doesn't mean that somewhere in here with a buy down, with a lock and shop, with whatever, with maybe buying a house with an ADU, with that extra income helping you, it doesn't mean that there isn't a way to try to get the customer as comfortable as possible with a reasonable position. Okay, because the reality is it's not the rates and it's not the price, it's just the payment. That's all that matters. When I talk to clients, I never talk about rates. I just talk about, oh, that's $4,200 all that. You comfortable with that? Yeah, that's awesome. Okay, great. They don't even ask me the rate. They're just happy that's what it is. And it's fixed, obviously. Everybody's happy, right? So one thing to remember is that what is your client's, tolerance, shall we say? Everybody has a different tolerance. And that is what's important. And that is all I have. Like I said, I'm trying to keep it so 1 o'clock, guys. Unless there's any other questions right now, we'll talk after. And I'm gonna bring Luis up. So Luis is gonna give you more of a different spin. Now he's gonna give you more of the realtor spin on his side. And what he does, I know his numbers from the past, he sells anywhere between 35 to 65 houses a year with the team. He's, like I said, been in it 30 years, I don't know how many millions of dollars, but I definitely crush it when it comes to, you're at 40 million or so a year. Nothing 30.
Thanks, Fernando. Let's give Fernando a big hand. For us to use to be able to sell more homes, right? So I have a team. I have one assistant, one full-time personal assistant, and one buyer's agent. And so currently, year to date, we're currently at a little over 16 million in volume, 17 transactions. Last year, we closed 32 million, 41 transactions. I did have a few more agents and they've slowly kind of retreated. But I do have one very strong buyer's agent that I'm very happy to have. And as Fernando mentioned earlier, I've kind of tried to simplify my life as well a bit. I have 2 kids, 10 and 11, and my son is very involved in sports. And so anything with a ball he plays, and I'm trying to, be as involved as I can as a father. So. But he thought it would be good for you guys just to hear from someone from a different area, from a realtor perspective, what I see, what's going on. But as he said, you need to know your audience. So I'd like to take a poll and just ask, how many of you, by a show of hands, have been in the business less than 2 years? Okay, a few. How about less than 5? Okay, over 10? Okay, good. And how many of you were in the real estate field in 2008? Okay, so this market shouldn't scare any of you at all, right? I certainly don't think it's going to be nearly as bad as that was. I started in the business in 1992. So it's weird for me to say this is my 30th year in the business. I remember trying to grow a mustache and wear glasses and look as old as I could. Back then, I weighed like 135 pounds when I started. But it's been fun and it's gone very quickly. But I'm still doing it, right? They say you're either growing or you're dying, and I'm not ready to die just yet. So I'm here to learn as well. So I appreciate you guys inviting me. So yeah, back in 1992, I didn't have a marketing budget, and you couldn't buy leads on Zillow, right? So I really went out and prospected, right? Open houses, door knocking, cold calling, all the old skill prospecting tools. And it was a down market too. The S&L prices, right, started in 90. And so the market was going down as well. So I didn't know any better, right? There were certainly veterans in the office that were complaining about what the market used to be like, but you know, it's the market I was in and I had to do what I had to do because I wanted to sell some houses, right? So, you know, Gary Keller talks about something when the market is not so hot, right? And anybody want to blurt it out?
Sure.
Right, be prospecting based and marketing enhanced, right? Versus leading with marketing, right? Because you're gonna spend a lot of money in marketing, right? So prospecting based, marketing enhanced, not that you're not gonna do any marketing, but that you're really going to be actively, you know, pursuing clients, right? And so, you know, going forward to 2020, you guys can all remember that. And so in March, right, we thought this, you know, the sky was falling and, right, and it was, I had a lot of cancellations that month, right? I had about 6 figures in cancellations that month. But then the market came roaring back, demand came roaring back. But I think that, you know, a lot of agents that did well in 2020, and, you know, your team leader can probably attest to this, there's many agents that did better in 2020 than in 2019, right? And, you know, there was a call to action from our company, right? Gary Keller told us to do something. What did he tell us to do?
Didn't work.
Care calls, right? Exactly, care calls. And I really think that it was because of that, right? That a lot of agents stopped, you know, chasing the shiny object of how they were going to lead generate without talking to people, and they started talking to people, right? People that they knew, people that knew them and trusted them, liked them, right? And would do business with them if they needed to. And so those care calls, I really think that really helped our company really, you know, outperform, you know, other companies and sell more homes in 2020 than in 19. Because we started connecting with those people and we came from contribution, right? We called not just as a cold call, we called to see how they were doing, right? Check on them, build that relationship. And really that's what I built my business on. You know, I'm very spread out. I'm not geographic based, I'm relationship based. And because of that, I'm kind of spread out. I moved to Orange County about 7 years ago, and now, you know, we're building more business over there because of my relationships. I talked about my kids, and just because I spend a lot of time with my kids doesn't mean I'm not prospecting, right? Because through those relationships, I've closed probably about $5 million in real estate this year, right? And so, you know, those relationships matter, right? And so, you know, I think if I were to leave you with 3 strategies, and certainly you should read Shift, and I recommend you do. And there's a lot of strategies that you need to employ when the market's shifting. But the first is to become a market expert, right? So when you're talking to either a buyer or a seller, you can be confident about what you're saying. Now, if you're talking to a seller, you want to be confident about pricing, right? And what I tell sellers is that, you know, if the market's going downhill and a ball is the price and it's rolling down that hill, how do you catch it? Right? You want to run and get ahead of it versus chasing it all the way down the hill, right? Till it hits the bottom. And that's what they need to do, right? So when they're giving you that objection of, you know, the price, you know, we can't look at the last comp anymore. If we're going up or we're going down, that last comp is not the price. You guys agree? Right? So, you know, what's our competition and what's it going to take to get your home sold before your neighbor gets it sold? Because the more days on the market we sit, chances are the price is going to be lower, not higher. Right? So let's get it sold at today's price, not tomorrow.
And just one more insight, guys. This is from a guy that's been in business about as long as Luis has, another partner of mine. He once told me many years ago his strategy when it comes to what he's talking about. When he meets with people, he says, it's very simple, ma'am, sir, couple. I can list your house or I can sell your house. What do you want me to do? Because listing it is, I'll just do what you want. Throw it on the market, that's it, whatever. Or you do, I can sell your house and you qualify. What I want you to do. That's basically it. I can list it or I can sell it. What do you want me to do?
And I think, you know, it's tough because we've been beat up by sellers and we've been beat up by listing agents if you're a buyer's agent too, right? I think someone out there said, oh, well, we can't ask for money for a buy down. I would say now you can. Right, the market's changed, and sellers are gonna start feeling that change too. They're gonna want a strong agent, and they're gonna pay the commission to hire that strong agent, right? Because they've been beating us down on commissions as well. So we'll start seeing commissions, go up. And I would say, I would go even further. If you're a buyer's agent and a listing agent is paying a very low commission, you can negotiate that too, right? If you have a buyer. So things are gonna change. And speaking of change, when would you guys say that the market changed? When? We're in July now, right? When did it change?
January,
You think Jen?
February, actually, when we started seeing the change.
Okay. Anybody else?
March 15th.
June, you said? I'll tell you, my experience, I had 3 listings that it just so happened I listed all 3 between March and April, between like second week of March and mid-April. And I listed them all at 1,199,000, right? Single families, small houses. And the first one, I had a weekend open house, right? Saturday, Sunday. Monday, I'm gonna be presenting offers, right? I mean, you guys know the drill. And, I sold it for 1,378,000, right, with 14 offers. The second one, towards the end of March, listed at 1,199,000. This one we were selling it with a tenant in place. So I had 2 hours on a Wednesday and a Thursday evening from 5 to 7 to show it. And same thing, got, multiple offers over 10, sold it for 1,435,000. With no loan. The third one, we listed at April 15th because that was the seller's timeline, right? He was working to get it ready and he was moving out of town. He was moving to Kansas City. And I did open house, right? Saturday, Sunday. Monday came around, no offers, right? Couple calls, right? We had, the open houses too, not as many people. So a week went by. Another week went by, we kept doing open houses. And so 18 days went by before we got our first offer. And I got an offer at 1,175,000, right? We were listed at 1,199,000. Now the seller's expectation was, oh, I'm gonna sell it for more, right? So, we had to deal with that. And so we negotiated and we got it up to 1,210,000 is what it closed at. So now that's a big difference from the 1,435,000, right? And that's where I saw it change really right there. And that day that we negotiated that offer and got them to go to 1,210,000, it was like 9:30 at night, I remember. And the next day they were going to raise the rates, 2 days later, they were going to raise the rates again. And so there was some urgency for the buyer to do it as well, right? And so, they came together and we were able to do it. Someone wanted to counter at 1,230,000 or 50, right? They wanted more. And, I told them, well, if they wanted to pay more than list price, they probably would have offered at least list price, don't you think? Right? So, but, maybe we could try 1,210,000, just 10 grand over and see if they want to make a deal today before the rate goes up. But anyway, we got that done, but I really saw it change there. I mean, right at April. And so we are in a different market now, right? And listing agents answer their phone now when you call. It's nice, right? You can take out a buyer and show them 5 houses and submit an offer and get an offer.
Gary, I think that one client, remember it's for the units and then I give you the price of the pencil up. Anyway, wasn't that Sam's Acres listing? Yeah. So funny, right? So I happen to be over there meeting with some team members that I work with and some other people at Compass. And Sam's in the office and he's like, hey, so Sam's, Fernando, where's Gary's office? But see, I mean, 6 months ago, I thought, yeah, Gary's, whatever, right? But look, and all of a sudden he's like, wait a minute, what's going on? I'm like, oh, yeah, I don't think it's penciled out. But yeah, just like you said, now everybody's like all of a sudden picking up the phone, even calling up, hey, write an offer or not?
And so now, we're talking about sellers, the conversation with the seller now, what about the buyer? For a buyer, what's the urgency to buy today?
Interest rates.
Interest rates, right? right? They're going up. Now, we can't make anybody move, right? Whether it be a seller, whether it be a buyer, you're not gonna make them move. Right? People move because they need to move. And why do they need to move? They get married, they get divorced, right? They have babies, they want a better school district, they retire, they get another job. Those are the reasons why people do what they do, and those things are not gonna stop, even though the market changes. Right? They may think about it and make sure it makes sense, but those life events are gonna keep happening. And so they're gonna need housing. Right? And we have low inventory. So, despite what the news articles that Fernando shared with us, right, of death and gloom, I don't really see that happening, not in Southern California, because I don't see a bunch of housing being built here, right? And unless everybody moves to Victorville from the beach here, they're probably gonna start, keep buying here. So what I tell buyers is, unlike the stock market, you're really never out of the housing market. Whether you're buying or you're renting, you're still paying for housing. So why not own versus rent? And if you do put off your decision on buying right now for another year, what's that gonna cost? $35,000, $50,000, $60,000 or more in rent that you threw away? So how much does that house have to go down for it to make sense to you? Or what does the interest rate need to be to make up those 60 grand you're gonna blow in rent? Right, so I think you gotta understand why they need to buy. And work with motivated people, because you don't wanna work with unmotivated people, because there's people that never buy. In a good market, in a bad market, with low interest rates, with high interest rates, they never buy. There's always a reason not to do it. And they're always renters, no matter what, and you're not gonna change them. We're not gonna convince them. You can be persuasive, but you're not gonna make somebody move. Right, and so I heard one agent say, my job is not to convince people, my job is to find the people that need my service. Right, so which means you need to talk to many people. I heard an agent at a panel that I was on once share that he had moved here to Southern California a few years back, and he had built a big business, and he was in insurance before. So when he moved here, he knew no one in the business, no one, period, right, in the area. And so, a mentor of his told him, your job is to make as many cold calls as you can, and then turn those cold calls into warm calls. Right, you need to feed that database and build those relationships as quickly as possible to get your business going, right? And that's what our job is, right? So we need to keep feeding that database and keep calling, which is the number 2 point is database. I think we got to double down on database. Your sphere, your family, friends, that relationship. Keep building those relationships. People are still going to buy, they're still going to sell. And for those sellers, and there's plenty of them that have been sitting on the fence of whether it's time to sell, all of a sudden now they're in a panic trying to get their house ready to sell it. Because they realize, I waited too long. Because before, all these agents were courting them and asking them to sell them their house, and all of a sudden now they see, oh, properties are not selling anymore the way they were. Maybe I missed the opportunity. So I mean, this is a good time to get listings. Right, that narrative and that whole narrative on the news, you can use that to get listings. Right, so it's a great time to go out there and get some inventory. And if you get some inventory, it may take longer, but it's still gonna sell. So what if it takes 30, 40 days, 50 days? Right, it's still a seller's market. What's the definition of a buyer's market, guys?
Lots of inventory, not too many qualified buyers.
So 6 months worth of inventory is the definition of a buyer's market. Right, and we're at, I haven't checked lately, but maybe 3.
CEO said that we're still somewhere between 3 and 4 months currently.
Yeah. So I would say less than that probably, but
Well, he's national.
we were at a month, right, in 2021, 22, so it's still not a buyer's market per se, but it's more of a balanced market, right, where you can negotiate.
Yeah, I think that's a very good point, guys. A lot of you that are newer have just seen craziness over the last 3 years, 4 years. it's not a balanced market. A balanced market, like you said, is when things go at a slower pace. You know, market appreciation 20% a year, that's crazy. It should not, that's not normal. That is out of control. That is not a balanced market. That's, you're just waiting for something to happen. Now, 2 to 3%, 2 to 4% a year, 2 to 5% a year, okay, that's fairly steady, and that's normal. That's something that the economy, for the most part, deals with nicely, okay? And also, I don't know, a lot of you know she's been around forever, Janice will tell us, she's somebody I've worked with for 20 some odd years. She was telling me about, I don't know, 30 days ago or so, that a lot of these agents that are new, that she sees in her office, don't know what it's like when you take a listing and it doesn't sell for 9 months to a year. Because that's just not something they've ever seen in their entire life. She's like, I was in that market when I would take a listing and then, okay, fine, a year later it's sold. Yeah, so now that's an extreme the other way, right? Versus
And
now.
a certain price point
Yeah.
too, depending on. the price
Yeah,
point.
so, but I mean, there was a time and place, some of you guys that have been around a long time, like Bryce. No offense, that's it. That you probably remember, yeah, I took a listing in 6 to 9 months, I still had it. Before it sold.
Well, just to add what Fernando was saying and Louis, go back a year and 2 years, the frustration buyer agents had. Is you were being outbeat by multiple offers. Now that's going to transition totally different, where you're going to have a little bit more control. So it's a good, normal market that we're facing in the next
I mean, I
several
think for an
months.
agent, this could be a better market, right? Because even as a listing agent, if you sell a house in 2 days, you lose out on that marketing, right?
And I'll tell
If
you.
you have a listing, you really have to leverage that listing to market it, get your name out there and get another listing. And get a few buyers out of it. But when they're selling like that, you don't have that opportunity. Right? You don't have that opportunity to sell it yourself maybe and make twice the money as well, right? So I mean, this is a good market if you work. If you don't work, it's not a good market.
And
right?
I'll tell you guys, the more experienced agents, 2 things I've seen in the last 10 days show me that there's a change in the market. One, my client, a couple days ago, they went for a $75,000 concession with correction, and they got it. Okay, some of it's gonna go to paying the costs and the rate down, the rest of it's gonna come off the price. Okay, now this is a $2 million house, but still, that wasn't happening months ago. And keep in mind, these agents are smart. This thing fell out of escrow. They got back, they finally got a buyer back in, these guys. What are they gonna do? Say no? Now they're risking another cancellation, not cancellation number 2. And every week that goes by as the market changes, that potentially makes it worse for yourself. You may now not even sell it for the next month or 2, or at a much lower price than you're getting now from these people. That's one. Number 2, and that's the guy that said, you want me to list your house or sell your house? We have one right now with him. It's been in escrow almost 2 weeks. He's like, do not order the appraisal. He told my assistants that. Don't order it. Very confident. So why is that? He's waiting for the home inspection to come back. This house, his buyer's got an 800 FICO and 50% down. This house also fell out of escrow. Okay, so he's waiting because he knows this house is not in great condition. Supposedly, I've seen it, but he's waiting for that to come back. And the reason why he's not wasting the client's appraisal money yet is because he's going to go hammer. And once he does, and if it's acceptable to both parties, his buyer, who he represents, then they'll continue, and then he'll let us order the appraisal. Then you see the psyche. Remember before, order the appraisal right away, immediately. Oh my God! Even before it's in contract, order it. It was going bananas. Look at this. 2 weeks later, no appraisal order. It was waiting. It's like a simmering stew. And he's like, "You want to cancel on me?" He's like, "Fine, do it." So see the attitude change.
It's so funny because 2 months ago, I was having conversations with agents and telling them, you're going to start seeing incentives, bonus incentives, commissions incentives, increased commissions on the multiple listing. And the agents were saying that's not going to happen, because they haven't seen what I've seen, what you've seen. And there was a email sent out. It was a Remax listing, and on there it said a $10,000 incentive if you can close in 30 days or less, on top of your commission.
There was one
Okay.
yesterday, fairly 3% with a 5,000 bonus.
Yeah.
That's not the market anymore, but it's
And
coming.
builders, we've sold houses in the Inland Empire, Victorville in that area. And so, I got a call from one of them the other day to invite me to some mixer, right? And so they're not moving their inventory and they're gonna offer more commission. So I wouldn't doubt they get up from, 3% to 6%, right? Or even 2% they were offering at some point. But I'll wrap it up with the last thing to focus on, I would say, would be your mindset, right? You can't sell what you're not willing to buy, and you gotta believe in homeownership. I believe in homeownership, because in the last 30 years, I've seen what it's done, for families, right? And how it's helped them grow. And, those people that didn't turn in their homes in 2008 or 10 or 12, they're better off for it today, right? So it may go up, it may go down, but over the long term, we know where it's going, right? So you gotta believe in it and go out and talk about it. All right, thank you guys.
Thank you.
If you guys want any of these flyers, email me your professional picture and all that stuff. My marketing gal can co-brand them for you. If you want to use like a lock and shop one for your people, say, hey, look, we got this, something like that, or a buy down one, or whatever, just let me know. You guys have my card. Holland has them in the front. And then the only other thing I'll leave you with is, did you not get at least one or two things that you can take here today back to the field and just kind of say, okay, I can calm the waters now. I don't have to live in so much fear or just feel like, oh my God, the sky is falling. It's not. It's just a matter of spinning all this stuff, using this data, this information to your advantage. And I'll tell you right now, in this room, everybody that's here, I guarantee you that 99.999% of every agent out there that you're competing against doesn't know any of this. Guarantee, or maybe one little niblet of it at best. Guarantee. This is what separates you guys from your competition, for sure. That's it.
Very good. Let's give them a round of applause. Reminders, tomorrow is our team meeting, 12 o'clock. Hope to see you there. Lunch will be provided. Also, Fernando, one thing that you missed, Friday, what do you got going on?
Oh, yeah.
I know this is a big
Kayaking
group.
and boating. I would call it and if you guys really want to watch something funny, you got to watch Gary kayak because it's hilarious. This guy doesn't know how to go straight. He will take 100 yards and turn it into 1,000 yards. I don't know how he does it. He doesn't. That is it. So yeah.
Awesome. Louis, again, thank you very much. Appreciate the insight and the information. Thank you, everyone. Appreciate you all. Have a phenomenal afternoon.